Hello there. Welcome to Business Today. I'm Tig Enright. Now, the French President Emmanuel Macron, is on the second day of a state visit to Germany today, meeting the Chancellor Olaf Scholz. The two European heavyweights will be talking about plans for an EU capital markets union and reducing bureaucracy in the single market. Well, this is all part of an EU plan to strengthen the bloc's economy and help it catch up with the US and China. Well, Riess is the Director General of the Federation of European Securities Exchanges and joins us now. Thank you very much for joining us today, Rainer. How much closer are we getting to this idea of a capital markets union? And crucially, what's it all going to mean?
Well, I think not too close. I think we've made some progress, but it is a project that is dating back from 2015. Lord Hill, the last British commissioner, actually had the vision to bring European capital markets closer together and to catch up with the US, to diversify funding sources for business, especially for small and medium enterprises. And the idea behind it is to foster growth, innovation, and resilience in the EU economy. And obviously, this would bring a lot of benefits, lowering barriers within the European Union for cross-border investments, making funding more available for SMEs, strengthening the role of the markets to fund the green and digital transition. Defense is now a big topic. So a lot of areas where we would need it. However, progress so far has been rather limited. There's been a lot of measures that have been implemented, but I think the real breakthrough has not been achieved.
Yeah, indeed. So we got some of the cheerleaders meeting about it today. Who are those standing in the way, though, and what are their reasons for doing so?
Well, I would say, and Brexit is part of it, fragmented. We are obviously more complex. We're less attractive to the outside world. We're in a global competition for capital. And the more divergent our rules are, be it on supervision, be it on accounting, be it on insolvency laws, the more fragmented our pension systems are and capital pools are not sufficiently large enough, the more difficult it is to really have the same valuations, the same broad capital pools that the US, for example, enjoys, and that simply the EU or the UK cannot offer to its citizens and to its companies. So this is a little bit the vicious circle that we have, which I think we need to turn in a virtuous circle where, sufficient capital is available to go in all these areas where we need funding.
Yeah, so lots of complications in the background. Some individual member states, though, are less keen. Malta, Ireland, Luxembourg. What are their reasons, as far as you know?
Well, again, if, some member states thrive well on certain business aspects, and I think that is fine if they, do certain niches. For example, the fund industry we know is very strong in Ireland. We know the bond markets are strong in Luxembourg, etc. But I think the question here really is, how can we ensure a competitive capital market that funds the entire European Union and preserves, I think, the wealth and prosperity and the growth prospects for European citizens. So I think this is a bit above and beyond national, appetites for certain segments. This is about how we fund ourselves and what our prosperity is going to be in the future.
Okay, Rainer Riess from the Federation of European Securities Exchanges, thank you for joining us today.